The next big boom for our industry, Bitcoin treasury companies. Some might argue that it also will be the next bust for our industry, but that's worth discussing today with Andrew and Tillman. But we don't just have Bitcoin treasury companies. We now have Ethereum treasury companies, XRP treasury companies, Solana treasury companies. Are these things a good idea? Will they succeed? What do they look like in the future? We're going to talk about all of that. Of course, review all of our experiences at Bitcoin, Vegas, and more. I've got Andrew and Tillman, the team from Arch Public. Let's go.
Let's go.
Hey guys, I got back from Vegas on Friday, but I've got two guys that decided to do the unthinkable, spend like a week in Vegas. You can see that now that they've spent time there, Andrew looks normal. I was going to make a joke, but Tillman, he got a lot of new shirts there.
This is not a new shirt. I've had this shirt for quite some time, but I appreciate the compliment.
Rob. Is his last name Nelson? Is Rob?
No, Beckham. Rob Beckham.
Rob Nelson's another guy I literally know, and I don't know why I said that. But Rob Beckham, he was like, "You're going to be my shirt consultant." That was on my way out the door. He made a shirt joke. It's good.
Yeah,
I don't think it was a joke, actually.
And I laughed a little bit uncomfortably hard at that joke. I thought that was quite funny. Fashion consultant. That was extraordinary work by Rob.
It was really good. It was really solid. So listen. I want to talk about everything, obviously, that's happening in the market, but I would be remiss not to talk about the amazing, I only had 48 hours, but the amazing time that we had in Vegas. Can I just show the summary video? Because it's pretty
Yeah, absolutely. Okay. Let's hit it. Boom. Done.
I was waiting for it. I was waiting for the drop there. Okay, so that was awesome. But let's talk about it. First of all, we were talking about this right before we got on the show. Like, how crazy was it that we had this small room and all those people showed up for recordings, which we booked like days in advance, and we had a live studio audience. Like when Jack Mallers, they were all amazing, but when Jack Mallers was in there, it was crazy.
Yeah, it was when Jack Mallers was there, the room was completely full. There was more than 75 people there. They were sitting in the front, crisscross applesauce, to spend some time with Jack. Adam Back was there, Vlad Tenev, David Marcus, Bo Hines. Just an extraordinary moment, not only for Arch Public, but for you, Scott, and for the brand just overall, to spend time with folks that are meaningful, sort of paragons of the Bitcoin story before and now. I think that's the neat part about what we were able to put together collectively, is that, Adam Back is the only human left standing mentioned in the white paper, all the way to a guy like Bo Hines, who's 29 years old. He's the executive director of crypto initiatives.
Dude, that guy's going to be president. That
guy,
I have never met a smoother, younger, he's like a little Kennedy running around over here.
And then everybody in between, right? So like 3-4 years ago, Jack Mallers turned into the belle of the ball because he did the work with Bitcoin and I believe El Salvador. And now is 21 Capital and everything that he's doing there, being on the forefront of Bitcoin treasury companies, which we're going to talk about here. Yeah, it was just it was a great moment. It was a great week. Enjoyed the heck out of it. It was not easy because being in Vegas for 7.5 days is nuts. But yeah, we got a lot done and really enjoyed the heck out of it.
Tillman, is it fair to say that the biggest takeaway was that everybody wants to be this guy? I mean, literally, like the Bitcoin treasury thing, I keep saying it, but first of all, this is an article saying copying Saylor's Bitcoin strategy isn't working like it used to, alluding to the fact that now companies announce that their stock goes down 12% instead of going up, a few 100%. We have a ton of companies trying it. We'll get into it, but that's literally all I heard about. It was like the only topic of conversation was who got into the treasury. And by the way, I'm totally here for people buying Bitcoin for their treasury. Financially engineering ways to buy Bitcoin we can talk about, but just, instead of cash holding Bitcoin, I think everybody's here for that.
Yeah, I think the thing I was most impressed with is just the level of maturity of the audience. I think it's gone up exponentially. I've been to a lot of the conferences, and most of them have been. I'm the oldest guy in the room, and there's lots of mascots running around in bikinis and all sorts of gimmicky ways to try to get attention. None of that's needed anymore. The attention was really all about the substance of the conference. And to say that Wall Street has arrived is the understatement of the century. I think there was tremendous interest from retail that was represented there, but I think there was more of a growth in the interest of corporations and institutions than ever before. And I personally love that, because I don't think that what Michael Saylor's doing is going to be, in my opinion, a unique breed of corporate treasuries. Raising debt capital in the way that he's doing it to buy more Bitcoin is not going to be the way the vast majority of the companies that I talk to approach this market. They're approaching it with, we want to get in. It's time. It's here. How do we get in? How do we get 1%? How do we get 3% of our balance sheet represented, in Bitcoin? And I think those are universes apart. I think that's a very prudent way to diversify a business and to gain a competitive advantage, and really start to attract more of the market that you're going after. I think that the Wall Street bets type of, gambling on highly leveraged, highly speculative, huge MNAVs, like all of that's going to come along with it. But that's not what I think the 80% is. I think that's the 20%.
Well, Tillman has done a good job of putting together, let's just call it a meaningful equation for when we have conversations with corporate entities that want to put Bitcoin on their balance sheet. And it's a powerful message, right? Number one, we're having lots of those conversations. So current customers of Arch Public are generally a lot of times people that have businesses, and they're having a conversation saying, all right, this is working for me personally. How do I integrate this with my business? Tillman, go through that equation associated with inflation that you've talked about, having to do with the cash position, because I think it's meaningful.
Yeah, so I don't think it's boring, but if you're just talking about preserving your purchasing power, and you're talking about handling the erosion of inflation, it doesn't take much exposure to accomplish that. Based upon my calculations, it's about 11% of your available cash can cover 9% of inflation across your entire cash, or across your entire liquid net worth.
Quickly, yeah, so you're saying putting 11% of your treasury in Bitcoin will outpace inflation for your entire position?
Correct. Yeah. And so if you look at that number and you go, okay, well, what's the risk that goes along with 11% of your cash holdings or your net profits going into Bitcoin? Well, I mean, even if Bitcoin drops by 50%, you've lost 5% of that, or you're down 5%. That's something that, in my opinion, a lot of companies can risk for what the upside represents. And the upside represents a lot more than just protecting inflation from erosion. It's also talking about capital raises, expansion timeframes, like everything gets accelerated. So a couple of our customers have some very unique business models that are franchise based. We're going to be helping them launch a Bitcoin treasury, not only for their stores, but to create a model inside of the corporate company and to show kind of the apples to apples comparison of what does it look like when you have a group of your franchisees buy into this type of a Bitcoin treasury, and what does that look like to the stores that don't, and what's the comparison. And what I'm seeing is that the amount of interest in investors that want to come into a deal that has Bitcoin, the amount of money that you're able to raise in the amount of time that you're able to raise it is very, very accelerated. You're able to raise a lot more capital for those expansion opportunities because there is a backstop on the economics. And if you combine that with a company that does, a lot of cash flow or cash flow positive from day one, it's exceptionally powerful from a model perspective. It makes it sing.
Yeah, I think that is the most compelling argument that you can give because it's just math and you can show it.
Well, and if you're one, if you
and honestly, you get outsized PR and marketing gains for doing
bingo,
it.
Exactly. You're basically getting free publicity. And if you look at the ones that I'm looking at right now and the ones that I'm putting together are some of these proposals for them. It takes their expansion efforts from 20 stores a year to 100 stores a year. It's a 5x multiplier in available capital. So, if you have a short time frame that you're wanting to capitalize on based upon an opportunity that you tied up, I don't think there's another asset out there that can accelerate that timeline as quickly as Bitcoin can.
Some people do, by the way. So we have Ethereum co-founder crediting Michael Saylor for crypto treasury firm Nudge. Of course, this was the one that was making a whole lot of news of late, is that they're helping SharpLink Gaming, I think 425 million in Ether for the treasury, but that's going to go apparently up to $1 billion. Now we have this company, NASDAQ listed Classover, plans to raise up to 500 million in new deal to build Solana treasury. I believe we had an XRP treasury as well. We have a Norwegian crypto platform that's doing Bitcoin treasury. So I don't know why this one's even news. This one's news because it actually went up and they've been going down when people do it. So this one went up 138% on their Bitcoin treasury plan. But there's like 10 of these a day now if you're looking at international markets. I mean, listen, there's millions of companies around the world, right? So that's not surprising, it's a fraction. But like Norwegian companies, Japanese companies, Indian companies, this is happening literally everywhere. And that, to me, this is a really exciting part of the Bitcoin treasury thing, right? I don't love, as you said, sort of the raising debt to do it and trying to be a baby sailor. But like, if you're in India, the very basic level of this, there's tens of thousands of these that could happen. And that has nothing even to do with our capital markets.
Yeah, this is going to continue at a breakneck pace. It's going to go very, very, very fast. We went from 2 or 3, quote unquote, Bitcoin treasury companies to, 10 in about 5 minutes, over the past 90 days. We're going to see the balance sheet movement happen much, much, much faster. We probably won't even be able to keep up with how many people are doing it because not all of them are going to do press releases. So it's going to happen very, very, very fast. It's going to be the foundation, just like in late 23 through all of 24. The floor associated with Bitcoin price was associated with Bitcoin ETFs. This year, it's going to be associated with treasury and balance sheet companies. So it's a good thing for Bitcoin overall. Now, to talk about, Ethereum treasury balance sheet companies or Solana or XRP, that's a different conversation. I think we begin to start swimming into the SPAC space with both treasury companies and then the balance sheet stuff. But that's not necessarily a bad thing, right? There was a point in time at the beginning of the SPAC movement until about the middle where there were significant gains across that entire sector. Now that sector came tumbling down in a very significant way. But at the same time, there's a movement from 0 to 100 that people can benefit from. And I look at something that you and I talked about, Scott, the Nakamoto story, the ticker symbol Naka. People that got into that capital raise at $1, I don't know what it's sitting at today, but it's in the 20s.
In the 20s. It was less than a month. At one point, it was like a 28x.
27, 20, yeah. So if you got in at $1 and you're now at 25 or whatever the number is, you're not unhappy. That was a solid move. So that reality being out there in conversations, and all of us know this, the conversations that were had at the Bitcoin conference is how many of these are going to get done, because you don't go from $1 to 25 and just ignore it because, well, maybe this turns into a bubble. Maybe I should be careful. That's generally not how people that have speculated about the movement of Bitcoin from 1,000 to 100,000 think. They think, hey, I've got another opportunity to capitalize on something, and I'm going to do it potentially very quickly. Where does this all shake out a year to 18 months from now? I don't know, but I do know over the next 6 months, it's proverbial gold rush to be frank.
Well, and that's I think that's the very highly speculative, almost gambling side of the corporate treasury, piece of this. I think the more conservative side, it reminds me of a story that I grew up kind of using as a marker in my life as a trader. My dad was a trader as well. And he was talking to me when I was about 15 years old about a position that he was taking a short in a company, and he was going very heavy into the position because he knew the company was going to most likely go bankrupt. And so he started loading the boat months in advance. And sure enough, the company announces that they are bankrupt. The stock plummets. He's sitting there, trading halted. He's sitting there just counting his chickens. This thing is amazing. I've made all this money. Sure enough, then the stock gets halted. The next day it opens up, gap up, huge gap up. And it was because in the time that they went bankrupt, a lot of analysts realized how much value was in their real estate. And that even though the business was bankrupt, the amount of value that they had in their real estate and in their stores, their physical presence, made them, if they liquidated it all, made the price go way up. So he lost a bloody fortune on that trade because there was an underlying base asset to the company that had nothing to do with their operational value and had everything to do with their real world hard asset value. I think what you're going to see in the future is a lot of companies using Bitcoin to be that backstop instead of real estate, because real estate has liabilities attached to it, costs attached to management, maintenance, all of those, the above.
And you can't liquidate it.
You can't liquidate it. You can't borrow against it.
You can be out of your Bitcoin position in 5 minutes, and you can borrow against it in 5 minutes.
Bingo. And so if I'm looking at, let's say I'm a franchisee of Subway sandwich shops. Some of them own their locations. Some of them don't own their locations. That's a huge differentiator in terms of value of that business. If I'm going into it, why do I want to own a location? If I put the same amount of money that I'd have tied up in real estate to own the location, I put that into Bitcoin, I would argue that Bitcoin does a lot more for the business being on its balance sheet than having that. Yeah, exactly. And posting collateral and borrowing capital and raising additional debt capital, all of that is a firmer backstop, in my opinion, now than real estate is. And I think that's going to be where the 80% lies. People replacing real estate value on their balance sheet with Bitcoin value.
It's coming in a big way. I can tell you right now. And there's some incredible hybrid platforms that are going to be working on these things. Actually, one of them that I met with in Vegas. Now I'm just going to give the soft shill. Hopefully, actually, we were talking about sponsorship and stuff. But these guys, the People's Reserve, did you meet them by any chance? Credit. So they're doing all the Bitcoin bonds. They're behind the scenes on a lot of structuring those. But they have this incredible, basically like Bitcoin-backed mortgage, where you effectively, if you own a property, you put it into the system and you earn a payback for having the property. It's really incredible. I'll explain it like more further, but like the point being, there's a million of these things that are even going to be able to be taken advantage of by retail. And the whole premise of People's Reserve and others is Bitcoin is pristine collateral. I've said this before. I think I said this on Spaces, but Michael Saylor, in the first podcast I ever did with him, which was 2 weeks after Strategy maybe bought Bitcoin, that was his biggest aha moment. He was like, I've got 5 yachts. I take loans against them. Good fucking luck taking my yacht by default, right? But the Bitcoin, that is liquidated instantaneously. It's made to cash for better or for worse, right? You don't want to get liquidated. But it is literally pristine collateral because it's liquid 24/7, 365, and generally holds its value and rises. I mean, that's so much better than, and like you said, doesn't have property taxes.
So there it sits with the People's Reserve and mortgages, right? So a lot of people don't know this. Most people think that BlackRock invented ETFs, right? Or Vanguard invented ETFs. They didn't. They came very close to, but there was a couple of very small companies that did ETFs very early in the life cycle of ETFs, right? And everybody's forgotten of them. I can't even think of who they are. But when you go to look up, well, how did ETFs come to exist? There was these tiny little companies that did it first, and then the big companies noticed, and they just completely took over the market. So that's what's going to happen with, for example, Bitcoin associated with mortgages. There's going to be these small companies that do it. They're going to do it really well. There's going to be huge, massive companies that notice and say, wait a minute, the numbers work. And they have the aha moment of Bitcoin is pristine capital. And so then boom, a market is created, like mushroom cloud, a market is created. And that's been my thesis for, I don't know, the last 6 months, is that 2 years from now, what we're going to be talking about on this show is going to be very, very different than it was 6 months ago, right? We talked about Bitcoin price. We talked about ETF inflows. 2 years from now, we're going to be talking about the difference in changes in price associated with the Bitcoin connected mortgage market. We're going to be talking about bit bonds in a serious way. We're going to be talking about options and futures, and how options and futures actions are really the place where Bitcoin's price is moving higher or moving lower, associated with movements in those markets, because that's, again, going to be the underlying layer associated with the pricing, associated with mortgages and bit bonds, right? A completely different landscape that will be 10x the market cap landscape of what we're talking about just spot Bitcoin price right now. Very, very different, but good, good.
The full suite of financial services and the full suite of products that exist for everything else. I mean, that's just where it's like buying Bitcoin for your treasury is the most basic possible fucking thing you could do right now. That's so obvious, but imagine when you could do all of this.
Well, but there's some really large distinctions in here that aren't nuances. Number one, Saylor and these Bitcoin Treasury publicly traded debt loop financing companies, whatever you want to call them, the zombie companies that are adopting this, they can't. They're in existence, and Saylor has said this multiple times. The reason why they're popular and they're able to raise the debt capital that they are is because a lot of companies can't have Bitcoin exposure in any other way. They only can possess equities that have some Bitcoin tie or exposure to them. I think the day is coming, and I think it's a sleeping giant that no one really understands and is going to be able to factor into the price or price it in, is the fact that the vast majority of companies that Saylor talks about, I think he said in his keynote address that there was 400 million public or private companies in the world. Well, all those private companies can own spot Bitcoin. Yes. They can own physical Bitcoin in a cold storage wallet if they so choose to do that. And I think that's the preferred way to do it. I think a lot of people don't understand the MNAV way of doing it. And quite frankly, are scared of it, myself included. What if I had an option?
If he had an option, he had an option. Here we go.
If I had, but the point is like some of the most boring ways that we can apply Bitcoin to the balance sheet, I think, are going to be the most prevalent. And if you look at the amount of companies that exist in the United States that want the competitive advantage of reinvesting dollars at an 80% average.
80% average. Okay.
Yeah. And that's a huge amount of Bitcoin that can be purchased. And it's very different Bitcoin than what we're seeing on some of these publicly traded companies. And I'm excited for that because I think that is, it's sort of the difference between having 5 publicly traded mining companies that represent 90% of the ecosystem versus having 10 million regular people like us that are mining representing that ecosystem. I think there's a tremendous amount of value in the latter.
It's interesting. These are the only conversations that are being had right now. I keep saying Bitcoin Treasury is just kind of the tip of the iceberg, but the lending side is going to be huge. Actually, just randomly, and I'm just bringing it up, no shill here, but like Ledin, we had them randomly showed up, Mauricio, who I know, on Spaces yesterday, and we ended up having a 30-minute conversation on Bitcoin-backed loans and actually why they're getting rid of their yield products. They're cutting out Ethereum, and Ledin is now literally just doing Bitcoin-backed loans, have been doing it forever. Like, they have like 400 million or 600 million. I don't remember what number he threw out, 700 already, with just average people taking these loans against Bitcoin securely, safely, never been violated. But even he said, he's like, listen, we're at like 12.5% you pay, and he was like, that's going to come down massively as the bigger players come in and as cost of capital goes down and as you get regulatory clarity. These are multi-billion dollar opportunities. And even companies like that have multiple products are focusing in Bitcoin-backed loans. Bitcoin has pristine collateral, Bitcoin-backed loans, Bitcoin-backed loans.
There were 2,000 whales that bought tickets to the Bitcoin whale experience. That was the biggest whale space by 5x that I've ever seen in the past 5 years, and it was full 75% of the time. Like the
whale room was bigger than the Bitcoin conference 5 years ago.
That's correct.
Physically.
That's correct. It was incredible to watch, incredible to see, and so that's the reason why Ledin, which by the way isn't the greatest name in the world to even be able to pronounce, Ledin something. Lenin. Okay.
Lenin. Have you
Lenin.
ever hodled?
Lenin. Okay. Lenin.
That's hodled.
John Lenin. Okay. Anyways,
Imagine.
So, if they've got 700 million in assets on their platform, that's probably going to double in the next year at minimum. And I guarantee you they have people ringing their phone saying, we'd love to take you public. I guarantee it, right? So the space associated with public companies, the space associated with capital shoveling itself into the Bitcoin space, again, is at the point where it's mushroom cloud ready. It's just going to keep happening associated with Bitcoin being pristine capital. Bankers can't help themselves, right? What they're thinking is, what's the downside here? Things go terribly wrong, but then I get a bunch of Bitcoin associated with it, and I can liquidate that at any moment if I need to, or I could just hang on to it because, oh, by the way, it just keeps going up every cycle. So that light bulb is going to go on at some point, and
would a bank rather have depreciatory assets as their collateral or appreciatory assets as their collateral? And there's no arguing that Bitcoin is a lot better collateral than the current system has. And if you look at most loans out there are collateralized by depreciatory assets. You get a bank loan for a boat, you put the down payment on the boat. Well, 5 years later, you've eaten beyond the down payment. The depreciation has eaten away the value of that asset. And a lot of times on boats, houses, cars, people are underwater. They owe more than the asset's worth. And that's not a scalable model. That is asking for a kind of a macro collapse. And we've seen that in housing collapses in the past. When we saw the 2008 collapse, it was because of that. There was too free of lending against the collateral that was being posted. And I don't think those days going forward look the same, because I think a lot of banks, to Andrew's point, they don't care if you default, if you've got Bitcoin as collateral. They want the Bitcoin. And what's going to be really interesting to me is some of these large entities that we all are familiar with, like MicroStrategy, turning into a bank and absolutely being the juggernaut that no one can compete with. Because he who has the most hard collateral, i.e., Bitcoin, can make the best loans and is the most solvent, has the most lending functionality and capability. They are the Fed window in this particular instance. And so, if you can see somebody like Caitlin Long, if they can provide lending to retail at a bank level, which I would guess is coming down the pike pretty soon, that's where we're going to change the industry, because it's like there's lots of people wanting to get into the proverbial vehicle, the Bitcoin vehicle. Well, there's a lot of people standing on the side of the airport saying, you know what, I'm not going to get an Uber Black. It's too expensive. I'm not going to get a limousine. Too expensive. Where are the taxi cabs for Bitcoin? They haven't come yet. They will be coming, and that's where all the volume will be had. That is where the vast majority of people will interact with Bitcoin. It won't be in Michael Saylor's, MicroStrategy. It will be in me buying, some rinky-dinky business that's a hardware store that has 10 locations, and they have great margins. They're putting 30% of their net margins into Bitcoin every year. That's going to be the most found model, I believe, out there, is just really run-of-the-mill commodity-based type businesses figuring out advantages through owning Bitcoin.
Yeah, by the way, I've showed the wrong website for People's Reserve, apparently. So, if you Google it, you hear these things quickly in the background. So I might have just showed a website that was for like an outright crypto scam of some sort. PeoplesReserve.com. I don't know. But yeah, they're cool. And so I think that's pretty much sums up the Treasury conversation. Andrew, you kind of hinted at another huge way for exposure, obviously, is going to be public companies, right? We didn't see mergers, listings, any of that for multiple years with just the sort of regulatory environment that we had before. The big news, obviously, right now, Circle seeks $7.2 billion valuation, an upsize IPO. Apparently, this is happening this week, by the way. Yeah. And I think it was $600 million when we reported it last week. Now $896 million in a raise. So obviously, we saw this with eToro, where they had this major upsize raise, which I think a lot of people didn't expect. This one you expect. Circle's been trying to go public for years. Yeah. One of the, I think, most reliable, biggest names in the crypto industry, certainly in the United States. This is going to be huge.
Yeah, it's going to be huge, and it's going to keep happening. This will be another check mark in terms of quote unquote Bitcoin/crypto companies going public. Gemini is going to do it. Kraken's going to do it. They're just all sorts of names that it's nearly impossible to resist that kind of influx of capital. It's absolutely impossible, because what you can then do with that capital, if the only thing that you do is then to take a sizable chunk of that capital and then add Bitcoin to your balance sheet, that alone is a really, really great idea, right? So they're going to, plug into the access of public markets. Again, where all of this lands a year to a year and a half from now in terms of the actual stock prices and asset prices associated with these companies that have gone public is a different story and a different conversation. But as of right now, it's a Katie bar the door type of situation. It's people are going to rush to access capital markets and have an influx of cash. Galaxy did it 2 weeks ago. Circle's doing it now. There's going to be a bunch of others that do the same for the right reasons. And then, by the way, what is that going to do? Beyond the cash that's just injected into spot prices, you're going to see a ton of merger and acquisitions activity associated with the stock availability and prices with those companies, right? So to give you an example, in 2020, about 5 minutes after Coinbase went public, they bought Tagomi, an institutional exchange, for $70 million. And 80% of that packaged buy was Coinbase stock. They were using their own currency to do that deal and have done so along the way with other companies. That will happen with the likes of Circle or Gemini or Kraken or whatever it happens to be. They're going to use their own currency to buy companies, to invest in companies. All of those things will happen. And again, that is new waves of capital washing its way through the crypto space, when just a year ago, the crypto space was just trying to turn a dollar from 15 cents. I mean, there was very limited capital.
A dime and a nickel.
Yeah, that's right. That's right. So huge shift. And again, with capital moving into the markets like this, it's very, very difficult, as I believe the now eponymous trader that we all know of. It's difficult to short the market. That's probably a tough idea to run with.
You're talking about James Wynn, who also is long in the market, lost 100, went up 100 million, then down negative 17.5 million, then got long again 100 million, then almost got liquidated, added 400 grand, which apparently kept him from getting liquidated, and then sent out a USDC link.
Please help.
To send him donations.
Yeah, please help.
Because the evil market makers are out to get him, and he's doing these trades to prove the conspiracy of the market. No, that's actually just how market work. If you have a billion-dollar position, you're dumb enough to show people where it gets liquidated.
Yeah,
free markets are going to liquidate you.
Yeah, that wasn't his thesis when he started this game, right? That I'm going to prove that the market makers are bad people.
God tier trader.
Yeah. So there's going, again, the influx of capital is going to be truly significant, and it's going to be kind of a beautiful thing to watch, to be honest.
Well, I think that it's indicative of the people that have come into the industry since this drought started. I don't think it's just been 1 year. Best I can tell, it's since 2021 the capital's dried up. There hadn't been significant money flows from VCs into crypto companies for 3 years, 4 years almost. And I think that that's absolutely changed. But I do think that the bells of the ball have changed as well. I remember Kathy Woods being at the center of those conversations 3-4 years ago. And where is she now on the list of, influential, Bitcoin buyers? She's pretty low on the list now, because people have stepped up, and they've stepped up in a way that's based on utility. And I think the VC money right now is flowing into infrastructure build-outs, which is incredibly encouraging, because that's they understand the interoperability of the markets and how that's going to allow liquidity to flow freely between traditional markets and crypto markets. And it's you see precursors of this over the last 3 years, in the fact that TradeStation was for a long time the only exchange that I can think of that carried the status of being able to trade traditional finance instruments and crypto instruments and take the crypto off exchange anytime you wanted to. That was a very unique little mechanism that existed.
Even when Robinhood added it, the big pushback at the time was that you didn't have a wallet, so you were locked on the platform, and they obviously added that. Yeah.
Bingo. Well, and then they allowed you to take it off platform. They didn't allow you to take it off platform. And so everybody's been fleshing out their models for 3 years, saying, okay, what's the most prudent way to do this for us? And I think that you've got now folks that have kind of learned their lesson on the back of speculation and hype, and they're really leaning into utility. And I think that's why Circle's so valuable. Why? Circle is no different than a piece of real estate that has a bidding war attached to it. Like, there's a lot of people. Ripple is bidding for them. Coinbase is bidding for them. Like, they have two juggernauts that are worth $100 billion plus that are saying, we need your infrastructure and we need your customer base, and it will be a force multiplier inside of the ecosystem that we already have and possess. That's a very different VC conversation and capital raise conversation than we saw in the past, where people were betting on ICOs and just trying to essentially be the sexiest exchange on the market based upon what crazy assets you could buy or had access to. This is a whole different ballgame. This is all about utility, and it's about bringing the masses into the coffers. And Robinhood did the same thing. Why'd they lead going into Canada by buying a crypto exchange, the WonderFi deal? Well, because they want the infrastructure in Canada. Why are we expanding our offering at Arch Public from Gemini into Kraken in the next couple of weeks? Because there's a lot of things on Kraken that you can't serve Canadian customers. You can't serve Canadian customers on Gemini. So it's a real function driven exercise instead of like just a theory or a sizzle driven exercise.
Yeah, there's that question. Andrew and Tillman, I want to get on board, but Gemini rejected me. Nothing against Gemini. We love Gemini, by the way.
Yeah.
Just saying,
Yeah.
but I've got Kraken and Coinbase. So like, I don't know what's under NDA or what's allowed to be discussed. You just said the words Kraken. I didn't. So I can tell you that. Can I just generally say that we are actively working to bring this to customers? Every exchange where you would possibly be trading, including some you may not have mentioned and may not expect.
Yeah. Correct. Yeah, we want our customers to be able to run our automation across multiple exchanges simultaneously and choose which assets they are trading based upon the depth of liquidity and the fees associated with it. So we're vendor agnostic and product centric is the way that I would put it.
Yeah, coming to an exchange and country hopefully near you, I think is the fair way. So listen, maybe this is the perfect segue to actually talk about it. Obviously, we've got the website here, archpublic.com. Oh, dude, we didn't do the bannery thing. Do we want this one?
There we go.
Or do we want this one?
Well, I will tell you the hottest thing that the hottest iron in our fire is the fact that we want people to use the product for free. And what's interesting about all the conversations that we did have with exchanges during the conference and beforehand, the models are being broken. And what do I mean by that? Traditionally speaking, algorithmic companies like ours, they got a piece, or they were trying to get a piece of the trades that are executed and the fees attached to them. That's not how our model works. We get no fees from your trading activity. We don't care whether you take one trade or 1,000 trades. What does that mean? Well, it means that we're building automation with a different motive as a primary driver, and that's going to be a very different tool. But the thing that we saw at the conference, not only at the Bitcoin conference, but I was able to speak at the second ever XRP conference, and I was shocked with the scale and the size of what they're doing over there as well. But we want millions of users to use our free product. That's the bottom line, because seeing is believing. You've never used a tool like this before. We have people as high as you can imagine inside of very large companies trading our tools and coming back to us and saying, this is best of breed, first of its kind. And there's no way that we can sit here and tell you how powerful it is.
Yeah, he got cut off, but I'll quickly say, since he got cut off, like, this is not just the power of individuals now. You mentioned it earlier, but now you're talking to like the institutions and the treasury companies, RIAs, right? This is going to be how companies do this for their clients, because it's just better. You don't want to have some guy in an office somewhere, hopefully catching it at 3 a.m. on Saturday when you're doing this on behalf of your customers. Right. I mean, it's just obvious. And it's funny because all the products you guys built and incredibly how well people did. You forget that a year ago, we started with a $10,000 portfolio trading equities on TradeStation, which, by the way, is up over 40%. But, that people have to be very comfortable with the trading mentality when it comes to that, because you're going to, when you go, especially to the more exotic strategies, you're going to draw down 30%, go up 30%, be down, you get all the volatility that freaks humans out. We've honed in now effectively on, hey, man, just buy Bitcoin and do it a little better. And that's what everybody here has really wanted. Not that like you had so many amazing experiences with customers who are very happy with those other products across the board, but still, like, this is the thing that thousands of people are signing up for because it's just so obvious. And you're not going to lose money. This is the way that you're putting money into the market. just
Correct.
doing it better.
It's a completely different animal, and the most valuable thing to us is that it's scalable. You can't scale an infinite amount of capital into trading automation that's trading equities, because the markets can't live up to that promise. The markets aren't that liquid. As it relates to Bitcoin, Bitcoin can be, if you want to own Bitcoin, the question becomes, how are you going to acquire it? And to Scott's point, there is no better way to acquire Bitcoin than to do it in an intelligent dollar cost averaged way, where you're capitalizing on yield opportunities that present themselves during that accumulation phase, but you're also accumulating. So you're getting the best of both worlds. Whereas when you're trading equities, you're settling in cash on every trade. That is what is the byproduct of a good trade, is more cash. And what's the byproduct of a bad trade is less cash. There is no other option. Whereas when you're trading Bitcoin, there's a different value proposition. If you take a trade in Bitcoin and it doesn't present itself an opportunity to liquidate some of that position, it continues to go down. Well, you should be dollar cost averaging on the dips anyways. So you just essentially apply what doesn't work to your advantage from a volatility and a cash creation perspective, and you apply that to a long-term hodl position, and you wait until the large pumps, and it does those things exceptionally well. And so you get out of the product exactly what you want. If you say, I'm a company and I want to acquire X number of Bitcoin over the next 1 year, and I want to do it at the lowest cost basis that I can execute. I don't want any human intervention that can mess up. I don't want to have to trust any other company to execute for me. Don't want to pay fees to those ends. This does all of those things for you, and you remain 100% in control. And it keeps all of that off the order books until the trade is triggered. So, there's a big popular thing everybody's talking about right now with Michael Saylor with saying proof of funds, proof of reserves. Those are things that are going to become more and more important. And the bigger the company is and the more capital they're applying to the markets, the more valuable that information becomes. So how do you keep that information to yourself? How do you keep it, private until you've executed that strategy so people can't front run you? Well, the only way to do that effectively is with automation. That's the bottom line.
We have a case study that one of our employees put together because he was a user of our product before he became an employee, which is an ongoing story with our company. The last 4 people we've hired, actually 5 as of later this week, will be previous customers. They love our stuff so much. They're like, can we work for you guys? But he put together a case study that said, if you'd have been using just our arbitrage strategy with Bitcoin since the last Bitcoin conference in 2024 until last week, well, what would have happened? 98 trades would have actually occurred. You would have ended up with an additional 3.27 Bitcoin accumulated. You would have created $52,294 in cash yield. And your average Bitcoin price, after all that had happened, that you'd have accumulated, was around $53,000. So just extraordinary outcomes. Trades that happen, 7-8 times a month, cash yield that's serious dollars. By the way, that's on $100,000 starting balance, right? So that's all that happened with $100,000. Is there a better way to use $100,000 over the course of a year than $50,000+ in cash yield, 3.5 Bitcoin accumulated at a significantly depressed price from where it is now, and not a ton of trades? I don't think so.
It goes back to, like Saylor says all the time, and so does everybody that's smart in the space, volatility is a feature, right? What do they mean by that? It's like they say it over and over and over again, expecting us to understand that. And a lot of people nod their head with, oh yeah, I love Bitcoin's volatility. But it doesn't seem that way on Twitter, because when prices are going down,
Traders love Bitcoin volatility.
Yeah, when the prices are going down, everybody's complaining and the sky is falling. the reality of it is that if prices are going down, you're getting the hardest collateral asset on sale, right? So that should be a good thing, and you should be having a very prudent cash management strategy to have cash available for those depths, by the depths. The question then becomes, well, how is the volatility an asset to the upside? Well, it can be an asset to the upside in terms of your long-term HODL position. Eventually, the price every 4 years, we've seen the cycle. Eventually, it starts pumping. It makes you a lot of money. But the hold period during those timeframes is incredibly hard. It's incredibly tiring. It's incredibly stressful. Why? Because the price is doing this a lot of the times in between those periods. And so if you don't have a strategy that's systematically taking profits off of those volatile tops that you're seeing during those time periods, that is what they're talking about. They're talking about taking advantage of the volatility to the upside when it presents itself in the short term and midterm, not in the 4-year cycle. So you have to, in my mind, kind of have a balanced approach. How am I trying to use Bitcoin's volatility to my advantage in the next 3 months? How am I trying to use Bitcoin's volatility to my advantage over the next 1 year? And then finally, like, where do I believe Bitcoin's going over the next decade? Those are 3 very distinct strategies that are very hard for humans to deploy at the same time. Automation, you can set up instances endlessly against all 3 of those time periods, and you can have all of that volatility harvesting at your disposal at 2 a.m. without you sitting in front of your computer. That's very meaningful for the retail space, but I would argue it's even more meaningful to this, new wave of corporate buyers that are needing to be able to show their co-owners, their shareholders, the people that are counting on them to make those prudent buys. They need to be able to show them a well thought out, well executed strategy that doesn't have a lot of risk or human error potential attached to it. So, huge things coming.
Yeah, I mean, what I can say, like from my experience, like I said, we started a year ago. It was kind of an experiment. Had no idea. You knew, but like, I had no idea how much traction it would gain. Like I talked to these people. I went to this conference fully with you guys. You know what I mean? Like, I usually go to these conferences on my own. I do my own thing. Like, the level of passion and great gratitude and like obsession that the clients have with what you guys have built, like, you can't argue with it. There's hundreds of people there in the suite talking to me. I found this on your show. I'm so grateful. It just works. Like, and I know, like, the funny thing is we always sound like we're shilling something, right? But it actually, like, I like to talk about things. I wouldn't have we wouldn't be doing a show together if I didn't deeply believe that this was going to help people. I would never want to hurt. I did that with Voyager.
Well, there's a very
when I promoted that on accident myself. But like, I don't ever want to do that again. Like, I'm very particular about the things that I would like continue to push over time, and these people just love it.
Well, it's a very different product than anybody's ever seen. So obviously, if you hear about automation, you hear about all the bad things, and 90% of the news as it pertains to automation has been bad news. A lot of scammers, a lot of bad folks out there, bad actors trying to use like the genie in the bottle type model to say, look at this, we've got this incredible money-making genie that's going to grant you your 3 wishes. That's not what this is about. This is, we built a dolly. And we see a lot of people moving out of their apartment without the dolly. And we're going, hey, you know what? You should use this dolly. It's a lot easier to carry boxes down the stairs. And they're going, well, you scammers, you guys. And we're going, how about you use it for free? You only have 10 boxes? Use this thing for free. You don't need to rent the dolly or license the dolly. And so we just want people to use the dolly, because they're going to use the dolly and say, wow, this is a tool. This is something that helps me accomplish what I'm out to accomplish, not the genie in the bottle type of a thing. And that's why the product's free, and that's why it's not a watered down version of the product. If you are a corporate treasury company and you're going to be buying $100 million of Bitcoin on your balance sheet, use our product, because it's the exact same product that you would get if you bought the paid version. So our model is quite simply this. We want millions and millions and millions of retail users using the free product with no cost attached to it forever. And we want corporations paying us to stay in business so that we can provide that service to the community. That's how our economics work. The corporate buyers, the treasury buyers, the more institutional minded buyers that need our services and our counsel in terms of setting up the software and using its functionality, they are our paying customers. And everyone else that wants to just stack sats and use a dolly to do it instead of carrying the boxes themselves, reach out to us. We'd love to show you how to use the dolly.
You
Here's
never
the
know
one. You
what's
see-
going to come from the marketing genius mind of Tillman Holloway. Use our
Look at this guy. Look at this
That's
marketing
the thing.
genius. New tagline for you. It says right on your video, the Bitcoin yield algorithm, volatility is your friend. Volatility is your friend if you know how to dance with it. Arch Public. It's a good dance.
Use our dolly. That's the new catchphrase for Arch
Hello,
Public.
dolly.
Use our dolly.
What's archpublic.com?
Yeah.
By the way, you guys can see if you're watching this, like I'm sitting because I'm in the amount of times I adjust when I'm not standing, I'm annoying myself. This is why I have a standing desk with no chair when I'm normally doing it. Driving me nuts. All right, but Tillman's got a good lean.
Yeah,
It looks like he's driving like a 50s like Cadillac that bounces.
Yeah.
I've got a comfortable chair. I'm not standing up during podcasts. That's way
I
too
stand
much
up all the
work.
time. I hate sitting. My bad fact. It's 10 o'clock, guys. It's 10:01.
Oh wow.
7:01 for those of you who might be on a different time zone.
Pacific time.
Can't believe you guys stayed in
Great
Vegas
stuff
that
across the board. It was a great week last week. Thanks for joining us, Scott. All the interviews you did with the Adam Backs and Jack Mahlers of the world. Just extraordinary stuff. All that content's going to be coming out over the next week or so, and
I think David
very,
Mark is
very
out
relevant.
on my channel tonight. I think the plan is to roll those out at, the algorithm hates when you put too much content. So we'll do these in the morning and roll those out at night throughout the week, just so we can get them out,
Well, you killed it. I think the level of accessibility that these pillars in our community have given to people walking around the conference. Michael Saylor probably took 10,000 photos, and I'm not exaggerating, at the conference, and didn't say no to one of them. And same thing with John Deaton. Everything that he was doing, people were pulling him one way or another. And I think that's super special. My daughter plays pickleball competitively, and we've gone to some of these professional tournaments, and that's what I actually admire and love about it, is the accessibility to the athletes, and you can get right into the nucleus of the community and kind of roll up your sleeves and get messy. And the Bitcoin conference, there's a lot of hate out there, man. I can't believe how many Bitcoin centric people badmouth the conference on Twitter. There's never going to be a perfect conference. If you're so mad that Peter Schiff spoke on stage, you've lost perspective as far as I'm concerned. Like the fact that we're onboarding so many people and that we rented out the Venetian Hotel to have a conference is mind-boggling to me. And the fact that we had the sitting vice president of the United States there supporting our community, and God knows how many publicly traded companies. And this true story, I get in the elevator, there's a guy in there that's in the back with his head down, and he has like 3 Secret Service guys in there, and I don't know who he was, and I don't want to know, but I know that there was a lot of undercover Secret Service folks at this conference, and I've never seen that before. So the fact that David Bailey is able to bring this nucleus to one spot, it's unbelievable. And I will tell you this from a selfish perspective. Everybody sleeping in one hotel, it was very special to see all of your, peers.
In a casino.
In a casino. Like
so everybody's in the casino. Like the amount of people I just walked past, like I'm going from one place to another, and they're just playing blackjack or at a craps table or something. Literally everyone.
It was like a giant slumber party with the entire Bitcoin community. It was amazing. I give my hats off to the BTC guys. They crushed it this year, in my opinion.
Yeah, they had you guys had Gemini and Arch Public pillows, and I made the joke that we should have a pillow fight. Now we had a slumber party. We should have had a pillow fight at the slumber party, and it would have been absolutely perfect. And that's the only way I can think to end the show. So everybody, you can check out archpublic.com. The thing was scrolling. I'm going to do it for one more second. See, look. There it is. Archpublic.com. Discover Bitcoin yield. Just go try it. Throw $100. Go $100 in there and try it. Do $100 over a month. See how it does for you on a percentage basis, because it scales indefinitely.
Or download the free version and paper trade it. You know,
Yep.
you can literally do this for free, including the buying of Bitcoin side. So try this off. Try the
I
dolly
can buy
on, I
Bitcoin for
promise.
free.
Yeah.
Free Bitcoin. You heard it here first. Okay, show it.
Paper trade, Scott. Paper trade.
Paper traded. All right, guys. Well, next week we're just going to exclusively talk about the XRP conference.
Fun.
I wasn't there. I want to hear about it. All right, guys, we got to go. It's 10:05. Thank you, guys. Check out Arch Public. Thank you, Andrew and Tillman. As always, everybody else, see you tomorrow. Bye.
Let's go.